What's up everybody? Welcome to the Stocks channel. My name is Corey and today we had a mixed bag in the stock market with the S&P 500 inching higher and the NASDAQ 100 starting to slip. Will we finally see a pullback soon? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in this stock market today. Alright, so today SPY was up 0.09% and we continue to see the indices looking a little weak at these levels and we are waiting for a pullback. Remember, we're either looking for a pullback or a bull flag formation before we push any higher. So I still think this is stock picking season because there's not that much more upside in the indices without some type of pullback, but there's plenty of good stocks out there which are ripe for the picking and ready to buy off critical support levels. So I still label this as stock picking season because we're in a strong bull market, so you do want to go buy the dip in some great names that are sitting on top of support. Now, if we do see SPY breaking out above 471, we could start pushing towards that next price target up there at 477, but I just don't expect to see that happening without some sort of cool down period first. Once we get past this vertical line, which is tomorrow, I think the risk of a pullback or a cool down period will significantly increase going into the middle of November. So look for either a pullback from these levels back down to about 460 to 457, or some type of bull flag formation where we sort of just chop around before we decide which direction SPY is going to break out. So remember, we're still in a very strong bull market, so we are expecting to see that Santa Claus Rally, and we are expecting to go higher from here. I just don't think these are great levels to be buying the indices at. That doesn't mean we can't go higher because we more than likely will. It just means we're due for some sort of cool down period. So I think your cash is better off going into some great stock picks rather than chasing the indices at these levels. So everything still looks bullish with both price action and trend, so stay on the bull and continue to stay objective. Your critical support levels to the downside on SPY are right around 465, 460, and 457. And if we do break below our 20 simple moving average, our next critical support level is right around 450. Jumping over to the NASDAQ 100 triple Qs, we were down 0.14% today, and we do see the triple Qs starting to pull back ever since we hit that all-time high right around 401. So it does look like the triple Qs are leading the way lower, even though it's on a very, very low volume sell-off. Remember that we see very few sellers in this market, and that's why the bulls are taking the elevator up, because this is not a blow off top scenario where we're going up on crazy amounts of high volume. We're going up on average volume, but there's just no sellers, so the price has no trouble blasting through resistance. Remember, we follow price action here on this channel, and if there's nobody selling, that's because the market is incredibly bullish and there's just nobody rushing to get out of this market. More often than not, people are trying to get into this market and just dying for a pullback, and when everybody is waiting for a pullback, just sitting on the sidelines with cash, that eventually leads to those FOMO rallies where you see the market just continuing to go higher. When there's all buyers and no sellers, you get exactly what you're witnessing right now, and that's why we've been so incredibly bullish on this market. Remember, we were buyers of the dip way down here when we were getting bullish when everybody else was scared and getting bearish, and now up here, we're starting to get a little more defensive, and we're going and looking for stock picking season and not chasing the indices at all-time highs. So be a disciplined trader and understand at these levels, you need to be very picky on your entries, and you need to go find quality stocks that are sitting on top of support. There's plenty of them out there, and that's exactly what we're doing on the Stocks Channel Discord. So on the triple Qs, look for that breakout above 401, which could bring us to our next price target, which is just under 410. But more than likely, we're going to start seeing that pullback, which will bring us back down to about 394 or that gap close around 393. And below that, we still have support at 388 and 383. If we break below 383, our 50 EMA is sitting right around 375 to 376, and that would be our next critical support level. With a bull market this strong, I think we'll stay above the 20 simple moving average, which is going to be right around that 383 support range. On the Dow Jones, we were up 0.28% today, and we did see the Dow Jones getting to that price target at 365, but we failed to close above that level. So we see a lot of the indices hitting very critical levels, and we're starting to see a little bit of weakness, and we're starting to see signs that the bulls are getting tired. That doesn't mean we can't go higher, because if there's no sellers, we more than likely will continue to go higher. So if we see the Dow Jones breaking out above 365, the next price target is up there at 372. To the downside, you're looking for support at 360, 356, which is also now our 20 simple moving average. So we're more than likely going to stay above 356. But if we do break below that level, we still have support at 355 and 353. As you can tell, all of the indices are very bullish and you see very strong bull trends. So there's no way you can look at these charts and get bearish, even though we are expecting to see a little bit of a shallow pullback or a cool down period. In the Russell 2000, we're still looking incredibly bullish, with the Russell 2000 going absolutely parabolic and going up 0.31% today and getting very close to that next price target at 245. Remember, we saw this move coming from a mile away, and I did tell you to expect it to be very impulsive, and there's nothing else you can say about this rally other than extremely impulsive. Everybody's just dying for a dip in the Russell, and you're just not getting an entry, and that's why this has been such an impulsive rally. You can see that we were going up on increasing volume, so there was a lot of volume behind the bullish push, and anytime you see a bullish breakout with increasing volume, you just want to buy the breakout and go along for the ride. Lucky for us, we were in the Russell 2000 well before the breakout, so right now we're just on that gravy train, and we will likely buy the dip when we do get an entry, but we're letting our longs run and we're profiting from this very impulsive bull rally. We have a very strong bull trend with the price action pushing above that upper Bollinger Band, so there's just no significant dip allowing people that miss this rally to get in, and that's why it's becoming even more impulsive. Remember, when there's cash on the sidelines, eventually it does FOMO in, and that's how you get such strong bullish rallies in stocks like the Russell 2000. So if we do break that level at 245, look for the next price target at 250, and the pullback zone is still sitting right around 239. I don't think we'll break below 239, but if we do, look for the next support zone right around 234 and 232. In the ARKK ETF, we were up 0.91% today, so we did see the growth sector in the Cathie Wood ETF doing very well today. We're back above all the moving averages with the price action, and we do have that full bull trend. And remember, we're looking for this potential inverse head and shoulders pattern, and we could be putting in that right shoulder as we speak. So look for those critical support levels right around 123 and 120, and the 50 EMA is also another critical support, which is now at 119. If we break this neckline right around 126, that does mean we could see ARKK impulsing higher, and we have price targets that take us all the way up to about 135 to 143. So look for this very bullish breakout above the neckline at 126 to bring ARKK into the mid 130s to low 140s, and that would be a very bullish run for the ARKK ETF for quarter 4 and possibly even quarter 1 of next year. So I'm bullish on ARKK because the price action and the trend are still very bullish, but wait for that confirmation breakout above 126 if you're still on the fence about this ETF. Remember, if we continue to go lower and break down below 118, we could still go down there and close that gap at 113, so watch that very critical level right around 118. On the VIX, we were up about 4.5% today, so we continue to see the VIX climbing with SPY, which tells you there's a lot of uncertainty and a lot of fear about these all-time highs with no pullback. Remember, the VIX is mostly a measurement of fear, but it also measures volatility, and we continue to see volatility increasing in this market, even though we don't see it in the price action. So on a day like today where SPY was relatively flat, and we see the VIX going up 4.5%, that's very unsettling to say the least, and I would tell you that's definitely a warning sign flashing that we're about to potentially see a pullback, and it could turn into a very sharp sell-off. I'm not trying to scare you, but that's what the price action in the VIX is telling us. So you need to watch these VIX levels at 18.2 and 20. Above 18.2, as long as we're staying below 20, is still just a normal pullback. But if we see the VIX spiking out above 20 and closing above that level, we could see a much deeper pullback than I expected. And that's always possible. It could turn into a stock market correction. So watch those critical levels very closely because that will tell you how to handle the next pullback in the market. On Bitcoin, we're currently up 6.7%, and we do see Bitcoin going up on increasing volume and going up to a brand new all-time high, and this is exactly what we were just talking about in last night's video. We see Bitcoin going up on increasing volume after this sideways consolidation, and we're breaking out of this wedge pattern and blasting through 67,000, which means Bitcoin should have no trouble getting to our next price target at 75,000. So I'm still very bullish on Bitcoin because we have very bullish price action and trend, and we now have the bullish breakout on increasing volume. There's no way you can look at this breakout as anything other than bullish, so buckle up and enjoy the ride to 75,000. If we break through 75,000, look for the next price target at 86,500, and I do think that will be a very strong resistance level, so respect that level and consider possibly even taking some profits when we get there. Now, as long as we continue to see bullish price action and trend, there's no reason to get bearish on Bitcoin, so stay on the bull because you never know exactly how high something like Bitcoin can go. To the downside, we just need to stay above about 62,000 or at least this level down here at 59,000, but I don't expect to see us testing those levels anytime soon with this recent bullish breakout. On Amazon stock, we were down 0.85% today, but we did go up there and close that gap at 35.80, and that was a resistance level because we closed that gap and immediately started to pull back. So we see Amazon back down below 3,500, which is another critical resistance zone. And you have to ask yourself, why is Amazon pulling back at these levels after going up there with a bullish price action close of that gap? The good news for the bulls is that we're going down on decreasing volume, and we did gain the full bull trend today. So right now, if Amazon comes back down to this support level right around 34.52 and starts to bounce, I think you need to buy the dip. The strongest support level will be down here right around 33.84, and as long as we have the full bull trend, I think you need to buy the dip in Amazon stock. The chart looks like higher highs and higher lows, and we did close the gap above, so to the upside, you need to see very bullish price action while we're maintaining the bullish trend. If we can break back out above about 35.52, we could start running to some of these price targets above in the 36 and 3700s. So follow the price action because we know the trend is bullish, so as long as we're bouncing off support, you can buy the dip and get ready for higher prices. On Tesla stock, we were down almost 5% today and we finally closed back below the 5 EMA, so our rocket ride to space is finally starting to cool down and we could be coming back down to some of these critical support levels. By far the most critical level to pay attention to is right around 1118, because if we break down below that level, we could start coming back down to close some of these gaps below or test some of these support levels that we blasted right through. So remember, we had critical resistance up there at 1240 and we needed to break that level to get to 1400, but we could not break 1240 and we continued to get rejected from that level. So right now, if we break back down below about 1118, we could start coming back down to 1080 or 1050 and our 20 simple moving average, which is now right around 1011. If we break down below the 20 simple moving average, we should have no trouble closing the gap and testing the 50 EMA, which is right around 911. So by far the most critical support levels will be 1100, 1050, 1011, and then the gap close down here at 911. We need to start blasting back out above 1240 to get to that price target at 1412. And remember, there's still the possibility that we do that bull flag where we just ping pong around and form a triangle before we decide which direction Tesla wants to break out. So don't get overly bullish or bearish on Tesla stock because it's more than likely going to go sideways. This is the scenario that I favor most and I think has the highest probability because that will allow some of these moving averages to catch up to the price. And then the bulls can use the 20 simple moving average as support to blast out and get to that price target at 1400. So more than likely we're going to see a bull flag and we're going to see that 20 simple moving average catch up to the price before we see the next bullish breakout. We're still seeing very bullish volume on Tesla stock, so I have to give all of the bias to the bulls, and I think the bulls have the most control. We'll see the bears start taking over control if they can get a nice close below 1100, but until we close below 1100, I think you need to stick with the probability of the bull flag before the breakout and the run to the next price target. On Apple stock, we were down just over 0.5% today and we did close below the 5 EMA, and we still see Apple in the full bull trend. The price action is still staying above our critical support level, which is now at 148.4, and as long as we're above this positive sloping 20 simple moving average and we have the full bull trend, I still think Apple stock can go up there and break out and form a new all-time high. The breakout level is now right around 152 and the critical support levels will be 148 and 147. As long as we're above 148 and 147, stay on the bull and look for that breakout above 152 to test the previous all-time high at 157 and the breakout to the new all-time high at 162. If we break below 147, look for support at 145 and 142, and below that we're more than likely going to close the gap down there at 137. Remember, with the bull trend, you want to stay bullish until we either break down through critical support or lose the bullish trend. On the financial sector, we are up over 0.5% today and we still have bullish price action and we still have a strong bull trend. The industrials were up 0.41% today with bullish price action and a very strong bull trend. The healthcare sector was up 0.59% today with bullish price action and 1 day away from regaining the full bull trend. The energy sector was up 0.91% today and we see bullish price action with the full bull trend. So jumping back over the S&P 500, you can see that all of the sectors are still bullish with both price action and trend. When everything is bullish, you want to stay on the bull, even though at these levels, I still think we're due for a pullback or a cool down period, and I will still label this as stock picking season. When the indices get up there at these levels, you want to use the bull bias to go buy great stocks that are sitting on top of support, and you don't necessarily want to chase the indices. We do this all the time on the Stocks Channel Discord, and we are absolutely crushing this market. And right now, I still favor the small caps to take the lead. So stay on the bull as long as the market is bullish with both price action and trend, and we're bullish across the board in all of the indices and all of the sectors. This is a very strong bull market which will not die easily, so there's no reason to get overly nervous about this market and just try to short it because your fear is creeping into your trading. Unsubscribe from fear mongering and stay objective, and if you're staying objective, you're looking at price action and trend and seeing that they're bullish, so you need to remain bullish. Remember that I do have my own trade alert service called BANC Trade Alerts that only trades TQQQs, and I am currently running a 50% off promotion code for your first month. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. We're absolutely crushing this market over there on the Stocks Channel Discord. So if you're interested in joining bank trade alerts or joining the Discord trading community, you can find out how to join and all of the details in the description of the video. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.